Hello everyone and welcome to another technical daily video update. Today is Tuesday, November the 20th, around 9:58 p.m. Guys, we're gonna start this video with a little bit of market correlation because I know you guys understand how much I use and I love that tool. Well, the first thing that comes to my mind when I did this is how every index, a rallied instrument, rallied today. And the second thing that comes to my mind is how the euro, it was very, very weak. Take a look at this, guys. Take a look from here to here, how of these five instruments, which are the euro, Aussie, S&P, oil, and we got the Dow Jones industry, how everyone was rallied together. Now look how weak the euro went, and look how everyone stayed at the top, being Aussie the second weakest, but everyone stayed about the 50% retracement, and the euro makes a new low. Now, with that in mind, remember, all these instruments but the euro is destined to take this high. I don't think that the euro is going to do it. I think that the euro is going to correct higher by not taking the high. Now, let's start into the pairs right now. Let's start with the dollar. The dollar, we have two scenarios. The first scenario is the one that called for another high on the dollar. This scenario is calling that we are in a wave 4 and we're going to get a move to around 81.02 in the dollar before a most pronounced decline. Remember, in the dailies, this is the fifth swing, a 4, a 5, and this is the fifth. And the question is if this is all we're going to get within the fifth swing, or if this is only a 3 backs and higher. All right? But well, now the question is if this is ended here, or another high like it is proposed here, or the count is this one, which is also reliable when this calling from 3, 4, and the 5 or 8 already ended, and then the dollar is nesting to the downside. Let's take a look at the dollar then in the 1 hour. What do we have? We have 2 wicks of 5 wicks each. Now, I want you guys to understand this. This is either A, B, C with another low coming into around 79.50, or this is 1, 2, 1, 2. Now, no matter what it is, this separation that we got here today is going to make the case that the dollar is going to recover in 3 weeks. Now, let's take a look to the RSI. Look what the next looks like in an RSI. You got one swing with divergence here, and then we have another swing that is going to count with divergence. That's either a 3-way swing, or this is 1, 2, 1, 2. Now, that's going to bring us to the same scenario of the S&P. If the recovery right here in the dollar comes in it, then we're going to go and make a new high. Otherwise, we got to be careful. If you see that the dollar, it goes slow for the end of the week, remember, we are in holidays. If the dollar goes low and it takes time to get to a point around here, watch out, because that can be the next, this can be the high, and the dollar can go to the downside. Now, let's take a look at oil. Look at oil. oil is showing one path, bullish, three-way move, like we say, and higher. That's make the case for lower dollar. Keep that in mind. Another one that is recovering a lot is copper. Look at copper. It looks like it finished B right here, and it's kind of nesting before going higher. Now let's move on to the individual pairs. Okay, in the individual pairs, let's start with the S&P. Guys, the correction can be over here, can be labeled as a flat, or can be labeled as a triple zigzag. We explained today little details about it. All I can say is this. This is an impulse. Last night we caught with this move, and now a practical trader is going to weigh two things. It looks like seeing this angle right here that is going to be some type of decline tomorrow in the S&P. It went high at 36 points today. Pretty strong move from the 618 area. Now, what we should get three ways back. The degree of the ways it seems to be. Now, only two ways right here is higher from here like it is, or this is A, B, C, this is A, and then we got a flat beat. I got my question like an express about this area, and then it's gonna make another three ways back to the 11,684 and higher. Now, I want you guys to understand this. Only two ways around. This way is gonna place the euro to the new low, the dollar to the new high. This way is the nest in the euro. Clear. Those are the two scenarios. Nothing else right there. At the end, if you take a look at the S&P in the 4 hour, it's very clear that the S&P is gonna look, if this low hold, we should be around here now. If that low hold, the S&P should trade to around 1312 before any sizable decline to the downside. That's all you need to concentrate now in the move to around 13.8, 13.12, 13.38 in extension. Let's not worry about crash. Let's not worry about big move to the downside. We have been waiting for 2 years and never happened. So I believe it's going to happen at the end. But now let's try to catch the move to the outside right there. All right? Now, the euro. Very simple, the euro. 1 second. Let me delete this page. It's this one. The euro, very simple. What do you have? Same scenario everywhere. If the S&P goes into the flat, then we're going to get a new low. If the S&P goes into a correction and the low is in place in the S&P, then the euro is going to make 1, 2, 1, 2, and the euro is going to trade higher. Now, looking at the 4 hour chart of the euro, let me show you something, guys. Two scenarios. The first one, like I say, S&P goes to a flat, the euro is going to trade 127, 128. Now, let me show you something. If the S&P goes corrected and higher, then guess what? We are sometime someplace around here. I know for sure that the whole world is waiting to sell the euro around 131.55 area. I know that sellers, they're gonna be there. Now we need to see if those sellers have enough to bring the market down. Otherwise, those sellers, they're gonna be weak. There ain't gonna be enough power to bring the market down, meaning that it's gonna be a nest, and then the euro should correct this whole move right here most likely to 135, 137.48 before the next round of selling. All right. Now, let's take a look at some pairs that they were brought to my attention during the day. First, the Norwegian Krone. Why the Norwegian Krone? The Norwegian Krone is a pair that always goes very, very tight with the dollar. We are expecting a fifth way on the dollar, but guess what? The Norwegian Krone is very deep, which is telling me that most likely this high is in, wave one of the ending diagonal is in, and then we're gonna go lower. It looks like it's nesting 1, 2. I can see here 1, 2, 3, 4, 5, and I expecting 3 back and another leg to the downside. Now let's take a look at the CAD. CAD, two scenarios. Everything is gonna come to the same, guys. CAD, two scenarios. S&P in a flat, then the CAD is gonna bounce for 102.37 and 3 ways to 104.50 and lower. If the S&P then it goes into a 1, 2, then we got the high and the cap, and then we have 1, 2, 1, 2, and the cat is gonna trade lower. As simple as that. Another pair that is very deep is the Singapore dollar. Look, meaning that this cycle ended. The one that started around Christmas Day, that cycle, Thanksgiving Day, that cycle ended. This pair looks very bearish, and expecting this pair to trade lower to the downside in a powerful move that should take 103.82 as a target. Now, overall, that's what I see. I believe that the risk trade has either a risk-off trade, either one more low if the S&P goes to the flat, otherwise no flat, and then the risk trade is on and is nesting. And then I'm going to put, for example, the euro again. Look, the euro, if the S&P do not go to the flat, and you see that it's going to take 2 or 3 days after test 131.51, it take 2 or 3 days here and nothing happened, buy the euro around here against this low, because technically that's telling me that this is a nest and the risk trade is going to trade higher. Thank you guys. I'll see you guys tomorrow.